I'm Gidon Novik, founder of Lucid Ventures. It's the 22nd of February 2021. Just a few days to go before the end of the tax year and the deadline date to invest in 12J. My colleague Leo Ati is with me, and we're going to talk about the Lucid 12J retirement fund.
Retirement is a very exciting space, a huge growth industry, seeing large numbers of people living longer and growing. The above 60 category is a growing sector, and we see good returns in the retirement space.
I want to talk a little bit about my mom. She's 81 years old, which some people would say is old, but she really is a young 81-year-old. And I think this is a trend that we're seeing, is that old people are actually getting younger. They're living longer. They're more energetic, and the spaces that they end up living the last years of their life, I don't think have kept up with this new need and this new trends. We think older people want to live close to where they lived their lives. In other words, in the suburbs. Obviously, great care. We're in the hospitality game. They want hospitality. They don't want a hospital kind of feeling. They want a hospitality kind of feeling where they're taken care of and they're treated like guests. And then there's this issue of technology, which has overtaken all of our lives over the last year in a very big way. And we think technology has got to play a big part in how we can support their lives.
For a marginal tax investor, so somebody's on the 45% marginal tax rate, just the tax benefits equate to about 7 to 8% per year. And over and above that, the type of IRRs, the type of returns we can get out of this space, we're certainly aiming at above 20% for our investments, at an IRR over a 5-year period of above 20%. And as you say, no safe investment, but certainly with the property and in the first place, the growth in that market, it would be one of the safer investments in the 12J space. On the retirement space, we've partnered with a company called Silveridge, who are Michael Seath and Korean Briet, excellent operators and a lot of experience in the space, previously been involved in running the FEV, and a lot of relevant experience in this space.
On the property side, with Cumming & Staples and Andrew and John at Cumming & Staples, they've built our hotels, they've done magnificent work.
Beauty of the retirement space is just the liquidity, the underlying liquidity that is provided. The concept of a life right, where the people who live in the retirement village, they purchase a life right, the right to live in that retirement village for the balance of their life, and they pay up front. It's essentially a loan. They give a loan to the company, the property company, and that cash flow is then utilised to fund the facility, but it will enable us to buy back the investors. So investors who put their money in on day one and enable us to build the facility, we can then use some of that money that we would have generated from the sale of the life right to buy back the investor at the end of year 5. Secondly, also a key component of the model is that investors themselves can purchase a life right. They'll be on the top of the waiting list if they're interested to become residents of the facility as soon as it is built.